Alright everyone, welcome back to the channel. Cowboy Trades here. So, Bitcoin's breaking down, the stock market's following. What's the next price targets? Let's talk about it. Well, diving into the lower time frames, this is a chart that we shared over in my last YouTube video, and also I'm hoping you're a seasoned veteran of the Discord and you're already a member of this, so you would have seen this 2-to-1 risk to reward trade. We were posting this over at 20,300, take profit down at 19,200. This is what we were sharing when I was seeing this trade coming into fruition. All you really need to know about why I was shorting was we were seeing a 1 hourly reversion to the mean take place. We had a bearish retest of the 1 hourly EMA ribbons, volume wasn't coming in, we were barely getting above this trend line, and all signs pointed towards a move back down to 19,200. This is when we fired our short over on Discord. Once again, remember, do come and join the Discord. I only post trades with a super high probability of working out over there. So as you can see, this is beautifully worked out. From when we shared this 20,300, you can actually see from the moment we shared this, even if you were you could have used like a 300x leverage on this. We only went up 0.3% above our entry point, meaning if you're on 100x leverage, 200x leverage, 300x leverage, something ridiculous like that, this would not have even affected you. This is what I'm saying. When I share trades, we share trades with super high probabilities of working out, and as you can see, we've come down to this 5% mark, and we've massively exceeded it. So congratulations if you're in 10x leverage, that would have been a 50% profit. 20x leverage, that is obviously a 2x return. So now we can remove this 19,200 level. As we've hit it, there's not much point in continuing talking about this, but I did also give you a couple of price targets to the downside, except from that in my most recent videos. Now, what we were looking at is we were looking at this bark pattern playing out. On the 4 hourly time frame, you can see massive run up, spiky head, and then as quick as you come up, you come back down as quickly. And as you can see, these were the two price targets that we were targeting. Candle body close down here 18,750, and also the wick down here at 18,500. There was one other price target I gave you in my most recent video that we have not yet hit yet, which I am still keeping an eye on. This is of course your bear flag, or bearish pennant should I say, breakdown target at 17,300. You can see if we extrapolate this trend line, bada bing, bada boom, 17.3. This is where we should be going down to in the short term. So about another 10% move to the downside for Bitcoin. However, 17,300 is not the price target I really want to focus on in this video. We've previously mentioned this before. What I want to talk about in this video is our new price target. What happens after we break to the downside of 17,300? Well, in the higher time frames, what I'm currently focusing on is this 1.236 Fibonacci extension level at 15,800. Now, if you basically look at all of the major previous accumulation ranges before, you can see, you know, from this accumulation range, and this accumulation range since the top, if you draw your fibs from low to high, this 1.618 Fibonacci was a beautiful target. We spent most of our time trading around here in our first impulse, and then when you're drawing your second impulse, you can see from this low to this high, your 1.236 Fibonacci was once again another conservative price target that you definitely exceeded. You went all the way down to the 2 extension on this, but most importantly, you came back up and very well respected the 1.236 Fibonacci as you flipped this previous support as resistance. So with that being said, I think it's very conservative to look at the next extension from the 1.236 Fibonacci. If it does get much more brutal from there, yes, you do have a 1.618 Fibonacci down here at 13,000, basically 12,800. But nonetheless, right now, this is what I'm targeting. I'm targeting for a move down to 17,300, and then after that, I would be targeting for this move all the way down to the 16s. So when we're looking at this, you can see this is about a 17% move from where we are before I expect the next major bounce to happen in the markets. Now, one reason why it might not be the greatest time to short at this moment in time while we are trading right around this 19,000 region is, as you can see, you know, this green box just, it's kind of hard to see if I zoom in on the weekly. you can see this green box that we're trading in right now is literally your point of control on your fixed volume profiles. Now, I'm looking at the fixed volume profiles just purely looking at from the lows to the highs of this market cycle. So we're not taking into account the 20,000 region. And then I've also done that where we take into account the 20,000 region. Really, they both say the same story. I think it's more accurate to draw it from this low to this high, mainly because we're looking at the fixed volume profiles. And why we want to draw it from here to encompass these data points is because, as you can see, this 20,000 region that we're trading at right now, we really haven't traded at this level apart from this time right here and this time right here. We've counted this up in a previous video, but we spent 10 weeks worth of data traded at 20,000. There's about 5 weeks right here, and there's about 5 weeks right here on this top if you count them up. But with that being said, the next major area of support on the VPVRs is what we're sitting on. So I would like to first see us get rejected from the upper level of this VPVR, or fixed volume profile, sorry, at 20,000. Not that I particularly think we're going to move up that high, but I wouldn't want to tell you to go short now and then we move up to 20,000 and then we go down. So right now, especially after we've just hit the nail on the head after our most recent prediction, I would be sitting on the sidelines waiting for the next major move to be confirmed in Bitcoin. Now, this can be confirmed another way. It doesn't have to come up to 20,000 for you to make a short. Now, on the daily time frame, once again looking at this fractal where we connect simply the lows, the lows, the lows, and you notice that as soon as you break beneath this trend line, it's basically curtains and you're done. So what I'd be saying on this one is I would be waiting for a daily candle body close beneath 18,600, and that's all there really is to it. A daily close beneath 18,600. I will be shorting towards my immediate short-term price target, 17,300. I would be looking to take a tiny amount of profits, then potentially enter another short as we do come back and retest the quote-unquote bottom at 17,600. But like I said, I'll keep you updated in the immediate short term. 17,300 is the next place to target. If we do come up to as high as 20,000, I'll update you over on Twitter, so make sure that you do follow me over on Twitter at 618_cowboy, so you can be privy of when I enter my next trade. But for right now, I'm sitting on the sidelines. If we go up to 20,000, 20,100, 20,200, that is when I'd be shorting. And also, if we break beneath this 18,600, have a daily candle body close, that is the next level that I'd be looking to short from. So, wrapping up this video, I would just like to quickly comment on the stock market. Now, if you're a veteran of the channel, you know that I normally like to do Bitcoin, stock market, and news analysis, and we combine all these things together in one video. However, today there is so much to discuss in terms of the stock market and the news that I'm going to create 3 separate videos for you today. So for this video, this was just the Bitcoin TA. In the next video, we'll focus on the news, and then we'll focus on the stock market. But with that being said, if we do just quickly look at the stock market, you can see the stock market opened all the way down here. If we come down to the ES futures, so looking at the E-mini futures for the S&P 500, you can also see today we did make a new low on the mini futures, and we're currently hanging around about this 76. There's not too much of a divergence between the SPX and the E-mini futures for the SPX, but right now I'm really just witnessing continuation. Like, we're just lollygagging right now. Not a lot has happened on the day. I do have my eyes on these price gaps to the downside. For today, I don't particularly think that a major move is going to happen, but bear in mind, on Wednesday, we've got our next FOMC meeting. And as you can see, the next price gap to the downside that I'd be keeping my eyes on for the SPX is down here, 3791. The next price gap to the downside of there is 3678. And then I would be targeting for us to take out these lows, the same lows that were formed when Bitcoin was trading round about that 17.5 region. So these bottoms line up, and as you can see, you know, the pre-market for the SPX, well, the pre-market was obviously open before the SPX, but the SPX is now open. Pre-market was telling us before that this was going to move down, and as you can see right now, we're literally just lollygagging at the lows that we were at last Friday. So I am expecting more continuation to the downside on the SPX, and also bear in mind, on Wednesday, on the 21st, we have our next FOMC meeting. Now, on our previous FOMC meetings, we always have this trend where we rally on the day of the FOMC meeting, and then we either dump, you know, whether it's next week or whether it's tomorrow. Normally it's tomorrow. But with that being said, you can see this fractal just keeps on playing out time after time after time again. And while I'm not recommending that you fight the trend on this one, which is another reason why particularly I'm not recommending that you go short at this very moment, because there will be a lot of volatility coming in when the FOMC comes. But previously, we've had these 75 basis point increases, and we've all kind of expected them, or at least I've expected them. Other key economists have expected these. I mean, these were fairly predictable. If you've studied economics, if you've read any economic literature, then it should be pretty easy to see that we have at least a 75 basis point increase coming. But right now, the Chicago Mercantile Exchange Group is also saying, hey, there's a 20% likelihood that we could have a 100 basis point increase. And before you say, you know, this was already priced into the market, just like the other ones, this really only came into fruition in the past week. I mean, as you can see, 1 week ago, people were saying there's a 0% likelihood of 100% increase. And now, obviously, after the Powell meeting, after everything with the ECB, it's turned up to 15% yesterday, and it's increased to 20% today after the bearish opening on the stock market. So once again, my friends, right now, I would not be looking to short Bitcoin on the 1 hourly time frame and the 4 hourly time frame. You can see that we're a little bit oversold, but what I would be saying is keep your eyes peeled up until Wednesday. I'm not expecting a major move to take place until Wednesday, but after Wednesday, if we do get a 100 basis point increase, in my opinion, we're going to immediately, on the day, not on the week, not on the month, on the day, if we get 100 basis points, we're going immediately down to 17,300. After that, a little bit of lollygagging before we head down to my next target, 15,800. That's all I've got for you for this video, my friends. Like I said, I will be creating a separate news update and a separate stock market update besides this regular BTC update. That's all I've got for you for this episode. As always, Cowboy out. Peace.